The value of the Australian dollar is determined by the markets. When people buy and sell the currency, that impacts its value. There are four main drivers of the Australian dollar. The first are commodity prices. So Australia is a small open economy that is heavily reliant on its exports, and these include coal, iron ore, and gold. So when these commodity prices lift, the Australian dollar also tends to increase. The second important factor are interest rate differentials. So when Australian yields increase, that tends to support the Australian dollar. Whereas if, say, US yields increase more than Australian yields, then that tends to support the US dollar because investors are more attracted to US assets. The third important factor, equity market returns. So if Australian equity market returns are performing better than, say, US equity markets, then the Australian dollar tends to increase and vice versa. The fourth important factor is market risk sentiment. When the Australian and global economy is performing well, the Australian dollar also tends to perform well. Whereas in times of distress or when the global economy isn't performing so well, the Australian dollar tends to decrease. So when we see the Australian dollar strengthen against the US dollar, that can be because of political reasons. For example, erratic US policy making where President Trump threatens tariffs against another country. Currency movements can impact the everyday Australian. For example, when the Australian dollar increases, your overseas travels can become cheaper. Also, if you love online shopping like me, then goods that are priced in US dollars, like clothing, shoes, and technology, can all become cheaper if the Australian dollar increases. When the Australian dollar weakens, that can make imports more expensive, which in turn can add to inflationary pressures in the economy.